Hello, this is the last edition of this class on the inside, and the next two classes that you will hear is actually from my son, who I am very proud of. You're going to meet him in another video. I want to tell you one thing that many people may not have shared with you if they're investing. There is one site that you can actually check out. It doesn't give you a whole lot of information, but it will get you kind of interested in what's happening with investing in stocks or mutual funds. And I'm only going to talk about two companies. But let me tell you about this site right here. This site is called Morningstar. You can see it right here at the top of the screen. Morningstar.com. Morningstar is probably one of my go-tos that whenever I'm investing or if I'm thinking about looking at a company, I go to Morningstar first to try to get some more information. Now, again, to get deep information, you can actually, they give you a 14-day free trial, and then they actually give you a password, and you have to pay a monthly fee, or I'm sorry, a yearly fee to get really into the companies and mutual funds. I'm a novice, basically. I tried Morningstar for a few times. It's really good information. Sometimes it's too much information. So, but I'm a novice, and sometimes I just like to check out Morningstar. So if you are into mutual funds or into stocks, if you're just a beginner, this is very easy. And we're going to walk through the process of finding out Morningstar. Okay, so when you go to Morningstar, let's go to the top of their page. This is what it looks like. So Morningstar basically gives you some information about the United States market. They give you the Dow Jones Industrial Average. They give you big companies, small companies, mid caps. They give you the S&P 500. They give you the NASDAQ. And again, we didn't talk about those in the last class, but the NASDAQ is mostly technology stocks. S&P 500 is the Standard Poor's 500. They're kind of slow investing companies. It's not really your Porsche or Tesla type of stocks. You kind of driving down the road in the VW Bug or something like that. But those companies are cool. Some people invest in that, especially when it gets to in their late 50s and 60s, they turn to something that is more steady instead of something that's taking off like a rocket or crashing down to the earth. But anyway, so you can get some information here, and you just basically scroll down, you see all of the sites and all of the news articles and stuff like that. Okay, so now I'm going to show you two companies. The only two companies I'm going to talk about. I'm going to show you that one company that kind of got me interested in investing, but that boat sailed off and I was still at the dock waving. Let me show you a company that we was talking about earlier, which is Berkshire Hathaway. So when you come to the Morningstar page here in the middle here, you can type in your ticker symbol right here or the company's name, and it will give you, what you're looking for. So let's click on Berkshire Hathaway right here. And then once you get to this next screen, you can find out some information about Berkshire Hathaway. Now, Berkshire Hathaway, this is the ticker symbol right here, which is BRK.A. And you can see the price, and I swear I don't want to look at the price, but I could have had $347,000 right now. Now, what you see over here, as of Friday, they were up and they made $310 that day. And over here, you get a lot of technical information, but we want to take a look at some of this technical information. Over here, you have a chart, an active chart that shows you what the stock was looking like during that day, the previous close, and then you can kind of see, and then after noon, it went down a little bit, and then went right back up right here. So you can kind of see it was like plateauing. It was going down in the negative, and then it caught a little fire, and it shot up to $310 more than what it started off with. So again, that's just some good information or bad information for me. Okay, so now since we're on the page of Berkshire Hathaway, and I pointed out a few things, I want to show you something right here of interest. If you click on this chart here that says show full chart, when you click on it, you will see this jagged edge of information. Up here is just the very first day, which was Friday. But for me as an investor, what I do is I like to look at, let's say, the last 10 years of a stock and see how it progressed. And let me just move this down just a hair so you can see it. You see, in 10 years, the stock was here, and then it rose. You see how it's rising? And it gives you everyday prices that it rose. That's what I'm looking for when I invest. I want to see continual movement up. I don't want to see the opposite. So if you find out a company is, the hottest thing, and then you go to Morningstar and you get the ticker symbol and you click on the chart and you see the chart is kind of inverted, maybe after 10 years, that might not be a good deal for you to invest. You always want to look for companies that has a steady growth. Now, remember, I was telling you, let's click on the max right here. This is the maximum amount of information you can get. Remember, I was telling you that back in the 1990s, the stock price was right about $400. And this is me down here, like contemplating, should I even buy? And I didn't. I mean, like I said, I only had $40 to my name. But look at that. Look how it just kept going and going and going and going. And then it actually caught fire. Let me slide this over here. Look at that steady peak. You see, so I missed out on that. And I bring that to your attention because, I've had horror stories, and then also I had some successful stories too. But if you just take a look at any type of investment, you want to see an upward trend and not a lower trend. Okay, as we leave Berkshire Hathaway and talking about stocks, we're going to transfer over now, and we're going to talk about mutual funds. You're going to find a little bit more information on mutual funds than you do with stocks. That's just how this site is. So we're going to type in this ticker symbol. Now, remember, I told you that all mutual funds end in the letter X. So you see right here, this is a company I just picked, which is American Century Focus Dynamic. And you can see that ticker symbol right here is ACFOX. Now, Morningstar with mutual funds, and even with stocks, if you pay for the premium price, you will get a rating. Everybody uses, or a lot of people uses, the Morningstar rating. So 5-star rating is the absolute best. 1-star rating is the absolute worst. So you want to try to watch that. Again, I'll just show you some quick things if I was looking at purchasing this particular stock. Now, this particular mutual fund. So right now it's a 5-star fund. So you might say, wow, let me just jump on it. And it might be something good for you. But again, just let's take a look at how much it costs. First, the quote price is $52.35. That NAV means the net asset value of one share for that day is $52.35. It gained $1.18. And you can look over here and you can find out some information. Now, this might be a little bit too much, but I just want to bring out some things to your attention. One, it's a large company. It trades in the large company fund growth. As you can see, the investment style is large growth. Your minimal initial investment for mutual funds, they can range from $500 to $10,000. But this one here is $2,500. So if you spend $2,500 in this particular mutual fund, they would divide that by $52.35, and that tells you how many shares that you will have. Okay. The status right here means that it's open. That means it's not closed. That means you can buy right now. Like Berkshire Hathaway is actually closed. If I had $347,000 laying around, I couldn't even buy a share of Berkshire Hathaway because the shareholders decided to make it private now. So this mutual fund is actually open. Here's another thing that I like to point out that some people may miss. Right here, this turnover. Let's see if I can get this camera on the turnover part. I apologize right here. Turnover. It's at 27%. That's a low turnover. That means a lot of people are holding on to this 5-star fund because a lot of people are not asking for their money back. So when people tend to ask for their money, that tends to make the price, the net asset price, go down because they have to pay their people their money when they want to get out the stock, out the mutual fund. So the low turnover rate tells me that this company is doing pretty good. All right, so let's see how good they're doing. So we're going to go back up to the top here, and we're going to take a look at their performance. And when you take a look at their performance, you can see on the chart that I was telling you before with Berkshire Hathaway, you can see a steady growth of this mutual fund. So it's going pretty good. You have the fund category that is highlighted in purple and is slightly ahead of the normal index, which is the Dow Jones Industrial Average or the other index that they're basing it off of. And so they're doing quite well, and they're, making some money. It might not be for you, but that's something just to take a look at. And also you can see down here, which is kind of key for me, that the mutual fund in 2010, 11, 12, all the way up to 2019 has only had one negative loss. They lost 3% of their money right here, 3.5%. But last year they earned 32.30%. That means from January to December, they grew 32%. And now this year to date is up at 67%. So they are going to have a great year because this is December and they're going to wrap up pretty good. So maybe that's why it's a 5-star fund. One other thing for you to take a look at is their portfolio. So what is this company actually investing in? And this is where you can find this information under the portfolio. When you scroll down to the portfolio, I'm going to be moving this chart side to side because there's some stuff that's on this side and some stuff on the other side. So we're going to move it down just a little bit, and you can see that this company is investing in consumers, cyclical, and financial services, and not too much in real estate. Matter of fact, they're sitting at 0% in real estate, but consumer cyclicals are companies that people tend to buy a lot, like the Home Depots, the Staples, the companies that a lot of consumers purchase, Lowe's and things of that nature. So you can take a look at that. Also here they have a bunch of technology down here. They have 26% technology, and they have about 10 cents of consumer defense. So if you look at your dollar, the dollar that you give this company, they can break it down to the penny of what they're spending. 19 cents for consumer cyclicals, 13 cents for financial services. You have 11 cents down here, 4 cents to industrials. So you can see all of that. And then if you go down a little bit more, I think you can find some of the companies that they're investing in. So the biggest company that they're investing in is Amazon. And then they have Tesla. I didn't know that. That was by surprise. Salesforce, Visa, Boston Beer, Square, MasterCard. So you can kind of see what they're investing in. So by law, the company has to share that information with you. They can't keep it secret. They have to tell you what the companies that they're investing in. So right now, it looks like they're holding about 36 different companies. They're doing some other companies here. They're holding 3 of them, but you can kind of see, kind of get a grasp of what the companies that they're investing in. So maybe this is why this is a pretty good fund. Amongst other things, one, a low turnover value. You can see the steady growth, and then they are a 5-star fund. So this company is doing fairly well. Now, if you forget about Morningstar, if you can't remember Morningstar, you can also just go to, let's say you can just type this into Google, the name of this company, and let's get the ticker symbol here, and this is ACFOX. So we're going to copy and paste this. We're going to put it in the Google toolbar, and when we put it in the Google toolbar, it will come up. You can see, let me page up a little bit. You can see right here this information. This is basically the same information that we just discussed right here. So you can take a look at 1-year growth, which I don't recommend. You always take a look at 5-year or 10-year growth. Let me move this over just a hair. Or you can take a look at the max growth. So again, you just want to take that little snapshot and just see if this is a fairly good company for you to invest. So that's it for now. I hope you learned something, and I hope you continue. If you're investing, continue. And if you're just starting to invest, get started now. You can't wait. Don't wait for tomorrow. Do it today. Don't wait till next week. Do it today as soon as you can. As soon as you can get some money together. Hope you do the very best you can in investing. Talk to you later.